Hello, my dear students. Welcome, everyone. So, the next chapter for discussion is accounting for electricity companies. So, banking companies, insurance companies, electricity companies. These three chapters are there as a separate set, and together they will occupy 10% weightage in corporate accounting paper. Okay. So, the main objective of this chapter is how to prepare the financial statements of electricity companies, or what are the special points in the accounts of electricity companies. So, see, this chapter, based on the contents which is given in the CMA study material, I have classified into two parts. First part is accounting of some special transactions. Second part is preparation of financial statements of electricity companies. So once we learn the special areas, the next thing is learning the formats of financial statements of electricity companies, like how we have learned the formats of banking company, insurance company. Similarly, for electricity companies also, we have to learn the formats of financial statements. But before that, there are certain important special transactions are there. So those special transactions we need to learn. So there are totally 9 areas which is there as a special transactions. First one is security deposits. So this is one topic, first topic we are going to learn. Next, service line come development charges, which is charged by the electricity company from consumers. Next, what are the grants which is received under APDR, DRP, and then depreciation concept, debt equity ratio, and return on equity, interest on capital, loan capital, interest on working capital, and also operation and maintenance expenses. So these are the 9 areas we need to discuss. And sir, everybody knows what is electricity company is. So the company which is engaged in generation of electricity or distribution of electricity. So electricity is required everywhere. See, households, electricity is required. Industries, electricity is required. And for agriculture, farmer also electricity is required. So everywhere, educational institutions, schools, colleges, for commercial purpose, electricity is required everywhere. Now, this electricity will be generated and will be distributed. So therefore, electricity companies, what are the special accounting transactions? So we are going to discuss one by one. So the main thing is that now, see, actually they have given introduction also here, not at all important, but it is there. India is the third largest producer, second largest consumer electricity worldwide, with an installed power capacity of 395 gigawatts. So this huge demand of electricity is met by power generation and distribution companies in India, which includes thermal power generating, hydropower generating, companies producing power from other renewable sources. Not important. See what we are going to do with what are the methods of electricity in accounts, sir. So we are focused only on the accounts. How electricity generated, that is not the issue here. And but here important thing is regulatory framework. See, we have an act called Electricity Act. Now, by following that act, we have to do the accounting treatment in electricity company books. And see, this Electricity Act came in 2003. Before that, we have Indian Electricity Act 1910, Electricity Supply Act 1948, Electricity Regulatory Commission Act 1998. Now, all these are replaced by this new Electricity Act 2003. And without wasting much time, sir, let us start the first topic of our discussion. So what is the first topic, sir? The first topic is accounting of special transactions, security deposit. So first topic is what's that? Security deposit. Okay. So what will be the security deposit? Security deposit. See, I'm showing you here the Tata Power. There is a Tata Group is having a company called Tata Power. See here, Tata Power Delhi Distribution Limited. So government of in Delhi. So this Tata Power Delhi Distribution Limited is generating and distributing the electricity. Now, suppose I want to take a new connection, sir. Sir, whenever you want to take a new connection, so what you need to do is you need to, make some security deposit, sir. Electricity companies will take some security deposit. So some amount in advance. So here see, what are the charges for new connection? This question number 6, you see, what are the charges for new connection? So new connection, suppose if I want to take, so see here, what are the security deposit charges? And it is refundable, sir. Please understand. This is refundable, security deposit charges. Okay. This is refundable. So domestic up to 2 kilowatts, 600 rupees. And then above 2 kilowatts up to 900 answer. And then above 5 kilowatts, 1200. Non-domestic. Industrial, see here, industrial 4500 you need to deposit. Agriculture 300. Public lighting 3000. So railways, DMRC, dial, DJB, mushroom cultivation, advertising and hoardings, charge station for e-rickshaws, e-vehicles, any other category not specified above. See, like this, the power distribution company, the electricity company will charge some security deposit initially whenever you applied for new connection. So whenever these electricity companies have received this security deposit initially for new connection, so how accounting will be done? So that is what we are going to learn. So even suppose you want to, suppose you constructed a new house, you want to apply for new electricity, new connection, right? You have to pay some security deposit. See, every state will have distribution licensee. The central government, the state government will give license. Like for example, Delhi government has given a license to Tata Power, like that. So Gujarat, suppose Torrent Power, like that. So they are called distribution licenses. These people, these companies will generate the electricity and will distribute the electricity to households. So every state government has the right. State Electricity Commission is there. That State Electricity Commission is the body corporate. So they will decide. They will give distribution license to the electricity companies. Or sometimes the state government itself will generate and distribute the electricity to households. Whatever, whichever the electricity company distributing the electricity, it is a common practice that whenever a new connection is applied by the consumer, we will definitely charge some security deposit. Of course, this security deposit is refundable. Okay, sir. So what will be the accounting treatment, sir? Imagine, sir, whenever a security deposit is taken by the electricity company, this security deposit it becomes our liability. So we will show in the balance sheet as a liability. So whenever a security deposit is collected, bank to security deposit, we will write. And the security deposit balance at the end of the year, we will show it in the balance sheet. So the first thing you need to understand is, so whenever we have received a security deposit, so on receipt of security deposit, so the entry is quite simple, bank to security deposit account. And the security deposit will become our liability. Which liability? Non-current liability. Why this is non-current liability? Because is it going to repay within 12 months? No. Generally, when a customer pays the security deposit, I think so there is less chances that he will disconnect or he will cancel the license. So therefore, whatever the amount they have collected in the name of security deposits, so that security deposits they will show it as a liability in the balance sheet as a non-current liability because it is not going to be repaid within 12 months. So bank to security deposit. So this is on receipt of security deposit. So whenever security deposit is received, this is the entry written by the electricity company. And sir, there is one provision, sir. So the security deposit which is taken by the electricity companies, they need to pay interest also on that. So the security deposit, whatever deposited by the consumer, on that interest will be paid. Now, so on the security deposit, interest will be generated, sir. See here. The distribution licensee, that means the distribution licensee means the electricity company shall pay interest equivalent to bank rate or more. See, generally bank rate they will pay as may be specified by the concerned state commission. See, we have central electricity commission, state electricity commission. Every state will have its own electricity commission. So they will decide how much interest generally will be paid on the security deposits. So whenever there is a security deposit, on that security deposit interest will be paid. So therefore interest will be the expenses for the electricity company because they need to pay these interest expenses. So it is their expenses. So interest expenses account debtor to, and interest accrued on security deposits. So interest accrued on security deposit, on security deposit. So this is interest on SD, on security deposit. So interest expenses account debtor to, interest accrued on security deposit, interest on security deposit. And now sir, see, the consumer so will consume electricity. So a bill will be raised na, against that bill this interest expenses will be adjusted. Anyway, this interest whatever accrued on security deposit, so this is also a liability, sir. Suppose at the end of the year any interest accrued on security deposit balance is there, this will be shown as a liability. And later on, whenever electricity bill is generated, generally it will be adjustment will be done on yearly basis. For example, you made the security deposit. On that security deposit, whatever the interest accrued in the year, that will be adjusted against year end, whatever the bill generated, electricity bill, against that bill, this interest will be adjusted. So therefore, this interest accrued on security deposits, SD, interest accrued on SD account debit to, interest accrued on secure deposit account debit to sales turnover account or sales account, nothing but. So interest adjustment, whatever the interest adjusted accrued on security deposit, that was adjusted against the sales. I think these are the entries generally we are going to write, sir. So you understood, sir, what I am discussing? So first of all, what is the concept we have started, sir? Security deposit. So electricity companies, whenever a consumer applied for new connection, so they will charge some security deposits. Now whenever a security deposit is received by electricity company, that security deposit will become their liability. So bank to security deposit, it will be shown in the balance sheet as a non-current liability. And second thing is, on the security deposits, interest need to be paid. So therefore, whenever interest accrues, so interest expenses account debtor to, interest accrued on security deposits. And this interest will be connected, adjusted against the electricity charges, which is consumed by the customer. So therefore, interest accrued on security deposit account debtor to sales. Okay, see here. So on receipt of security deposit, bank to security deposit, on making provision for interest accrued on security deposit, interest expenses account debtor to interest accrued. And then on adjustment of interest accrued on security deposit in consumer bill, the interest accrued on security deposits to sales turnover. This is the accounting treatment of security deposit. Here, being adjustment of interest accrued on security deposit in consumer's bill. So whatever the interest, actually this interest now is becoming this one because we are adjusting it against his revenue, right? So therefore this interest accrued on security deposit will become, to sales turnover we have adjusted. And I told you security deposit will be shown as a non-current liability, and also any interest accrued on security deposit will be non-current liability in the balance sheet at the end of the year. And how security deposit will be calculated, they have a formula. Based on that they will calculate load into load factor of the category in which the consumer falls into billing cycle plus 45 days into current tariff. So you are not required to remember this. So there is a methodology, sir, to calculate security deposit. So they will decide how much amount of security deposit we need to collect, load into category, into what is the billing cycle, monthly, plus 45 days, into what is the current tariff. So per unit how much, see, depending. So for example, for electricity which is supplied to industries, horsepower, HP. So for normal consumers it is kilowatts, like that. So within the electricity itself there are different categories. Okay. See, regarding this security deposit, sir, I think we have one question, sir. We'll try to see that question. Yes, this is illustration number 13, sir, which is there in our material also as a first question. If you want, you see. Consider the following information provided by ABC Power Supply Company Limited. So there is a company called ABC Power Supply. Security deposit received from a customer on 1/10/2020 for 2 lakhs. Okay, 1st October 2020, 2 lakhs is received as a security deposit from customers. Interest rate applicable was 8% for 2021, 9% for 21-22. So what is the interest rate we are paying on security deposits, sir? 2021 8%, 21-22 9%. The accrued interest for the year is adjusted against the bill for the immediate next quarter. See, the accrued interest for the year, whatever the interest accrued on the security deposit, that will be adjusted against the bill for the immediate next quarter. So once the year is completed, on completion of the first quarter, so whatever the bill generated against that bill, this interest will be adjusted. Journalize the above transactions for 2021, 21, 22. Okay. So first of all, see this. When actually we have received security deposits received from customer on 1/10/2020. Actually here 1st October 2020, and then year end 31st March 21, and then here to 31st March 2022, right? So 2 years, sir. 2021, 21, 22. 2 years. So 2021, 21, 22. See, 1st October 2010 we received security deposit. Electricity company received security deposit 2 lakhs. Rate of interest in the year 2021 8%, sir. 8% rate of interest. This year 9% rate of interest. Okay. Now you tell me, suppose first year completed. So by the end of the year, what will be the interest on security deposit, sir? 2 lakhs into, so 8% interest into when we received 1st October. So therefore October to March 21. So October, November, December, January, February, March. So 6 months interest. So therefore 2 lakhs into 8% into 6/12. So it will be 8,000 rupees. So by the end of the first year, 8,000 is the interest accrued on security deposits. Now this interest will be adjusted against the consumer bills. Okay. Now this year over. Coming to the next year, 21-22. In 21-22, again, what is the interest accrued? Interest is equal to 2 lakhs is a security deposit. 2 lakhs is a security deposit. And here, if you see the question, the rate of interest is 9%, sir, not 8%. Sir, how much interest will be paid? See, that is decided by the state commission. Since in the absence of information given in the question, I assumed that whatever the interest rate which is given for 21-22, that will be paid. So therefore 9%. See, there is no such thing as the fixed rate of interest will be paid. Generally bank rate or some other rate, higher rate may also be paid. Or the bank rate means, for example, last year 8%, this year 9%. So 9% may be paid. So 2 lakhs into 9%. I mean, this is for entire year, right? Because for entire 1 year. So 2 lakhs into 9%. So I think it will be 18,000. So this is the interest for the year 2. So first year 8,000 interest, sir. Second year 18,000 interest. So therefore, first entry number 1, whenever we receive any security deposit, what is the entry? Bank account, electricity company books. I am writing in the books of company, electricity company. Bank account data to security deposit. 2 lakhs, 2 lakhs. And by the end of the year, interest expenses account data to interest accrued on security deposit. 8,000, 8,000. Now, once the year is completed, this completed year, till from here to first quarter end. So first quarter means April, May, June. So that means 30th June 2021. 21 bill will be generated now. Against that bill, this will be adjusted. Therefore, interest accrued on security deposit account data to sales turnover account. Now come to the second year, 31st March 2022. Interest accrued again. So interest expenses account data to interest accrued on security deposits. 18,000, 18,000. Now once the year completed, first quarter end. So 30th June 2023. 30th June 2022. So that interest will be adjusted against this. So interest accrued on security deposits account data to, what is that? Sales turnover. So therefore, first year 8,000, second year 18,000. So this is how we need to do we need to pass the entry. See here in the books of ABC Power Supply Limited, Supply Company Limited journals. So first October 2020, we received the security deposit. So whenever we receive any security deposit, what is the entry? Bank to security deposit, 2 lakhs, 2 lakhs. So this entry is very easy. Now come to first year end. So for first year end, how much interest is generated on security deposit? 6 months interest. So therefore 2 lakhs into 8% into 6 by 12. So interest expenses account data to interest accrued on security deposits, 8,000, 8,000. And now see, once the year is completed, in the question clearly given, whatever the interest accrued on security deposit for that year, it will be adjusted against the electricity bill, which is by the end of the year to first quarter. So first quarter ended on 30th June. So against the first quarter bill, being the adjustment of interest accrued on security deposit in consumer bill, what is the entry? Interest accrued on security deposit to sales turnover, 8,000, 8,000. So first year is completed. Now come to second year, 31st March 2022, interest expense to interest accrued on security deposits. I think they have taken wrongly. 2 lakhs into 9% they have to take for the entire year. So it will be 18,000. And again, by the end of the first quarter, whatever the bill generated, so for that year, the interest will be adjusted. So therefore, interest expense account data to interest accrued on security deposit. So 18,000, 18,000. And now that interest accrued on security deposit will be adjusted to consumer bills. So interest accrued on security deposits to sales turnover, 18,000, 18,000. So very simple question, sir. Here the main thing is interest calculation. So here the assumption is, see, in the year 21-22, 9% interest is there, sir. So I assumed that the commission is also paying 9% interest. Okay, sir, can I take that they will be paying only 8% interest? So ideally, my thing is that if it is question is silent, take the interest which is relevant on that year itself, because It is there in the act itself. If you read a state electricity act, in the act itself they said that whatever the bank rate they are following, along with that whatever the rate which is decided by the electricity commission, that will be paid. So there is no such thing that they won't pay 9%. So they can pay 9% also. That is also right. Okay. So this is the first concept in electricity companies. So security deposit, and we have completed it. Very small concept. So there is a security deposit is a liability. On that security deposit, interest will be generated, and that interest will be adjusted against the bill. Okay. Now the second concept, service line cum development charges. Sir, what is this service line cum development charges? I will show you. See here. This is the frequently asked questions of Tata Power Delhi Distribution Limited. Yeah. Look at question number 14. What are the service line cum development charges? So they have told why are these charges, why these are charged and under what circumstances, how much are the charges. Okay, as per DERC Supply Code and Performance Standard Regulations 2017 Regulation 21, service line cum development charges are the charges levied by Tata Power, that means electricity company DDL, through demand note whenever a new connection, reconnection, load enhancement request is being processed. So see, whenever a new connection asked by the customer, or whenever a customer want reconnection, whenever a customer want load enhancement, he want to increase the capacity, then this service line cum development charges will be levied. Towards, why these are levied? See, towards expenditures including the cost of service line and all other associated expenses. So whatever the expenditure we are incurring for the cost of service line and all other associated charges. The charges are based upon the sanctioned load requirement and irrespective of the length of the service line. So if you see here, actually they have given charges also. See here, type of area, electrified area, sanctioned load up to 5 kilowatts. What is the service line cum development? 3000 rupees you have to pay. More than 5 kilowatts and up to 150 kilowatts aithe, so 3000 plus 500 for kilowatt, like that they have given. See, suppose agriculture connection, suppose agriculture connection means 20% of the charges per kW for respective slab of load. So like that they have given. See, I think, see, service, see, actually see here, service line cum development charges. To get an idea to you, it is like this. See here, to connect, so they will, the towers will be constructed, na, the electricity wires. So this work is called what? Service line cum development charges. Laying of installations, extending the, so electricity extension wires, all this work is called, so service line cum development charges. Sir, what is the accounting treatment of this service line cum development charges? See, for example, there is a industrial, there is an industry which is there in the outside the village, which is far away place. There is no electricity. Now they have requested the electricity department. They applied for electricity. Now to extend the line, electricity line from the place to the factory, so what are all the charges which is going to be incurred? So they need to install, so electricity towers. So those electric systems wiring should be, so till the factory they need to lay down. For all this, they need to appoint labor. So there will be some expenditure will be incurred, na, lot of expenditure will be incurred. Now that expenditure they will charge in the form of service line cum development charges. Okay, Now, whenever the electricity company has received this service line cum development charges, so what will be the accounting treatment? That is what we are going to discuss now. See here, the service line cum development charges can be accounted and reported under any of the following methods. Actually, they have given a 4 options, very simple options. First thing is, this service line cum development charges, treat this as a liability, and every year some proportionate amount, some amount you transfer to P&L account over the life of the asset. So whatever the installations you have done, okay, so towers you constructed, so electricity towers, what is the life of those towers? Throughout the life, proportionately some amount will be transferred to P&L account. This service line cum development charges, treat it as a liability, and every year from this liability you transfer the amount. Subsequently, proportionate amount is transferred to income statement during the life of the asset. See here, SLD is accounted as a liability, and subsequently proportionate amount is transferred to income statement during the expected life of the asset. This is one option. Second option is, whatever the service line development cum development charges you received now, treat this as a reserve, which is not refundable, and it is disclosed under the reserves and surplus without transferring any proportionate amount to income statement. No transfer, just treat it as a reserve. It is like a non-refundable reserves we have. And accounting practice 3, sir. This says treat SLD as capital reserve and it is not refundable, and subsequently proportionate amount is transferred to income statement during the expected life of the asset to match against the depreciation on total cost of the asset. So see, treat this as a capital reserve, this SLD, and in proportion to the depreciation, every year some amount you transfer to income statement. That means you need to match with what depreciation of the asset, this proportionate, this SLD charges proportionately you transfer. Like for example, whenever you receive the amount, bank account debtor to capital service line contribution account, and every year transfer of proportionate amount to income statement, capital service line distribution contribution account debtor to P&L account. So some proportionate amount you transfer it. Capital service line contribution, they use as a word, capital service line contribution. That means being the SLD charges received, whatever the service line cum development charges we received now, they are treating it as capital service line, because we are treating it as a capital reserve now. So capital service line contribution, or if you want you can write like this, capital reserve of SLD or SLD capital reserve, like that. But the popular name is capital service line contribution account. Now this capital service line contribution account will transfer to P&L account. And last one is there, which is most commonly used, is what? This SLD, whatever we are going to receive from the consumers for service lanes, so reduced from the cost of the non-current asset, and depreciation is provided on the reduced cost. Sir, suppose the consumer is here, this place, and from this place to this place we need to construct the towers. Okay, we need to construct the towers, multiple towers we need to construct, and we need to extend the wiring system. So lot of things we need to do, right? For this, these are all the assets of the electricity company. Now these assets, okay, from the cost of these assets, you reduce this SLD, whatever the SLD we are receiving from the consumers, service line cum distribution, so charges whatever we are receiving from the customers, you reduce it, and balance amount of the cost you depreciate. This is also one method. Once again I am telling, sir, very simple, sir. SLD charges, first of all, what is this SLD charges? Service line cum development charges. Whenever a customer applied for new connection, so to bring electricity to his place, so lot of capital expenditure need to be incurred by electricity company, like laying of electricity towers, and extension wires will be brought to his place. So labor will be appointed, lot of excavations will be done, so lot of constructions if required need to be constructed. So some plants will also be, electricity plants will also need to be installed. So you are seeing, see, when you are passing by roads, you are seeing lot of electricity equipment, lot of electricity poles will be there now. So these are all nothing but constructed by electricity company. Now for that they will charge some SLD charges. So because see, for you we are bringing all these things. So of course they may not connect, they may not correct entire things, entire cost of the asset, but they will charge some amount in the form of SLD charges. Now these SLD charges, whenever received by electricity company, what is the accounting treatment they will do? Simple. One option is SLD will be treated as liability, and proportionate amount of SLD will be transferred to income statement over the expected life of the asset. That is one option. Second option is simply treated as a reserve, non-refundable reserve, and you show it in the balance sheet reserves and surplus. That's it. No need to transfer anything to P&L account, income. And third practice is treat it as a capital reserve, and from this capital reserve every year some amount will be transferred to P&L account in proportion to the depreciation of this asset, this electricity asset. Proportionate amount you transfer so to P&L account. That means matching concept. So bank account data to capital service line contribution, this capital service line contribution every year will be transferred to P&L account. And last one, most commonly used, is whatever the SLD charges we have taken from the customer, so that will be reduced from the cost of the asset, and the remaining amount, so we will provide depreciation. So I think this is the treatment, sir. We don't have I think we don't have any separate problem for this. Let us see. No, we don't have any separate problem for this, but they have given the concept. That's it. See, for at least for security deposit we have one problem, but service line come development charges there is no problem, sir. I don't think so. It is not that much important, but we have covered it. Next, third concept is grant received under APDRP. See, this is also one concept, sir. APDRP, grant received under APDRP. See here, sir. Accelerated Power Development and Reforms Program. One program is there of the Ministry of Power, Government of India. See, laying electricity lines is very costly affair. Lot of equipment need to be purchased. Lot of capital expenditure need to be incurred. So therefore, government has one program called Accelerated Power Development and Reforms Program, APDRP. They are called as APDRP, Accelerated Power Development and Reforms Program, which is actually this program brought by Ministry of Power, Central Government, Government of India. See, this, what is the main object of this program is support the state governments, support the electricity companies with grant. See, because lot of capital expenditure is required to laying of electricity, towers. So all for purchasing of electricity equipment, all those things. It's a very costly affair. So therefore, government itself, Government of India towards capital expenditure. So they will give grant received. Now the electricity company is receiving grants from the central government under the program. So then obviously this grant will be what? Capital receipt, and it is accounted as capital reserve and subsequently adjusted as income by transferring to statement of P&L in same proportion as the depreciation written off on the asset acquired out of the grant. So the simple treatment is, whenever you receive any grant under APDRPA program, this grant you treat it as a capital receipt, treat it as a capital reserve, and from this capital reserve proportionately some amount every year you transfer to P&L account in proportion to the depreciation of the asset which is acquired under the government grant. By using government grant, which asset the electricity company has acquired, now whatever the depreciation generated on that asset, in proportion to that, this amount what we have received, the grant we have received, transfer it to P&L. So therefore, what is the entry? Whenever we receive the grant, bank account data to government grant, deferred government grant, and this deferred government grant we will not transfer to P&L account at a time. This deferred government grant we will transfer to P&L account in proportion to the depreciation. So bank to deferred government grant to P&L. So therefore, just now we have discussed service line cum development charges. One of the option is, so treat this as a capital reserve and transfer to P&L account every year in proportion to the depreciation of the life of the asset. Same treatment. Receive the grant, bank account data to deferred government grant. Whatever the grant you received, you proportionately transfer to P&L account as a income to match with the depreciation of the asset which you have purchased through this grant. So this is the treatment in the same proportion as the depreciation written off on the assets acquired out of the grant. The depreciation for the year debited to P&L account on the asset acquired out of the grant to match against the proportionate grant transferred from capital reserve. So any unadjusted balance of capital reserve is disclosed under the head reserves and surplus in the balance sheet. So you tell me now, What is the accounting treatment whenever a grant is received under APDRP program? So whenever a grant is received, actually here, two things. The second concept, the third concept. SDL charges, service line cum development charges. So SDL charges, actually there are four options. So one option is this SDL charges liability, treated as a liability, okay, and transfer to P&L account over the life of the asset, over the life of asset. This is one option, sir. Or you have one more option. So what is the second option? So reserve, treat it as reserve. That's it. Treat it as reserve, which is non-refundable. Anyway, this is non-refundable, sir. So non-refundable, reserve. So no transfer to P&L. No transfer to P&L account. Or you have one more option, sir. Option number 3. What is this option is, whatever the SDL charges is received, treat it as capital reserve and transfer to P&L account. So transfer to P&L account. So in proportion to depreciation, in proportionate to depreciation over the life of the asset, over the life of asset, over the life of asset, okay. Or D. So the D is what, see, whatever the SDL charges is there, from cost of asset, you deduct SDL charges. That's it. This is one treatment. And whatever the balance cost is there, balance cost of asset, so this will be depreciated. So this is the most popular way, but there are options. So this is one way of doing things, sir. SDL charges. And then next what we have received is, discussed is grants. So grant received by electricity companies under APDRP program. Okay. So this APDRP program is offered by Ministry of Electricity. Now whenever a grant is received, sir, so what is the treatment, sir? Very simple. So when grant is received, so treat it as capital reserve. Treat it as capital reserve. So and transfer to P&L account. Transfer to P&L account. So over the life of asset, in proportion to depreciation, in proportionate to depreciation of the asset. So in proportion to depreciation of the asset, this transfer, this, and see, whatever the amount we received in the form of a grant, this grant will be transferred to capital reserve. Now, like a deferred government grant. What is deferred government grant? We are not transferring it to P&L account at a time. Rather, we try to transfer it to P&L account in proportion to the life of the asset. So in proportion to the depreciation. See here. So grant received under the Accelerated Power Development and Reforms Program by Ministry of Power, Government of India towards capital expenditure is treated as capital receipt and accounted as capital reserve and subsequently adjusted as income by transferring to statement of P&L in the same proportion as depreciation refund, written off on the assets acquired out of grant. And we know that the depreciation will be charged to P&L account. That is common treatment. So therefore here the treatment of the grant is the major focus. So whenever we receive any grant, that grant will be treated as capital receipt here. That means capital reserve. And it will be transferred to P&L account in proportion to depreciation of the asset over the life. Okay. And whatever the unadjusted balance, unamortized balance will be there, it will be there in the balance sheet as a capital reserve. So that means we have completed grants received under APDRP program also. Is there any special problem relating to this grants received under APDRP? I don't think so, sir. There is no problem for APDRP, just theory is there. Okay. So we discussed. So till now we completed 3 concepts. Out of this concept is having a problem, security deposit in our material. So we completed this.